Well, South Africa celebrated investment commitments today, but ratings agencies spoiling things with less than favourable research notes about South Africa's investment-grade future. Let's get more from Mateo Koripa, who joins us. Fitch, of course, Mateo, not too reassured by the medium-term budget.
Definitely. We did listen to the finance minister earlier this week on Wednesday saying they're going to reprioritize the money that they have in budget right now to make sure that there is a stimulus package that grows the economy. But Fitch saying they're not going to be buying that at the moment because the focus for the finance minister should be at lowering South Africa's debt costs that will be over 200 billion in 2020. So they're saying that they should be looking at that and tying and nipping that in the bud instead of looking for growth prospects. In fact, also saying that the stimulus package that they're going for with that prioritized bit of the money, that's 32.4 billion that's been reprioritized, that's not going to be enough to bolster South Africa's growth. And they're saying, look, in terms of their outlook, they don't see that happening. There should be at least more focus on the debt side for the country because that's where the crisis is.
And Moody's, of course, sharing that sentiment. They're worried about government's debt.
Definitely. Out of S&P and Fitch, Moody's is the one that's been quite lenient with South Africa's investment grade, also giving us, a few layoffs and saying, look, guys, get your story together. A couple of times, both Fitch and S&P have downgraded South Africa below investment grade. Moody's are the only ones that still hold us at some high regard, if you like. But they're really saying what is happening with the country's deficit widening and also the debt costs is also proving to be credit negative, which means they're also now starting to consider downgrading South Africa. But of course, before that happens, they'll have to be speaking to the SARB, to Treasury, as well as government to see how far they're going to have those reforms before the next budget, and then they'll make their decision. But some analysts saying it's quite tight a spot for them. They could eventually downgrade South Africa if things don't change.
So overall, it's looking very negative. Can the new finance minister do anything to actually reassure them before that happens?
I think he can, because he's been quite tough and frank, almost like a CEO in a company, to say, look, we don't really need SAA. It doesn't serve working class people. We should be, in fact, looking at the services of PRASA and the rail network instead of blowing money with SAA. Of course, he's given them money, which I think is the last resort, because had he not given them money, other lenders would have called in their debt, and that could have been a crisis there. But since he's been frank and since he's been quite tough on his own cabinet ministers who work alongside him, I think they could buy his story, because he seems to be going in the right direction. But also, it's all in the action, and the proof is in the pudding.
And then what about the investment commitments that we heard today? Will that reassure them at all? The business sector trying to show confidence in government?
I think it would, but as much as Fitch was saying, the money could be there. But as soon as you start with the project, as soon as we're seeing that the jobs come in, as soon as we see the growth come in, as soon as we see the debt costs going down and also that deficit getting tightened a bit, then it doesn't really change matters. We could have people throwing in $1 trillion, but if we don't act on the money and make sure that there's social economic projects that are driven to make sure that South Africa becomes, an almost equal society economically, then I don't think the change will impress them at all.
Yeah, they actually want to see things happening now. They're tired of promises, it seems. Now, while Jack Ma attended the local investment conference, which we've been talking about all day, his Alibaba tech company was cutting a deal with a South African mogul. Tell us more about that.
Definitely. Johan Rupert's group, Richmond, which is the luxury group brand, and that produces luxury watches and all sorts of luxury goods that are quite a taste for consumers in China. Of course, the Chinese do like their flashy things, and he's decided to go to Alibaba for a joint venture. Richmond currently has a company, a tech startup, that's going to be selling all these products online. Basically, they'll be using Alibaba as the infrastructure and the tech infrastructure because it's already popular in China. They'll be using the payment system as well coming through from Alibaba, and they'll be using that to sell some of the luxury brands, looking forward to taking advantage of the big market that spends on luxury watches, Patek Philippe and all the like that is under Richmond at the moment. So quite a big deal happening outside of the shores, and also quite a coincidence that it happens between a Chinese citizen and a South African citizen, given what's happening lately in terms of the trade relations between the two.
Yeah, a big deal with big bling. Looking at my non-watch, I guess I could dream. Thanks so much for that, Mateo Koripa.